What's up, everybody? Welcome to More Trades. Welcome to the stream. We're going to be analyzing the charts today, and I hope you enjoyed. We'll be looking at things that are present on the chart, what to expect for the next day or two, because we're going to be having the FOMC Fed funds rate and FOMC press conference. So we're going to expect some volatility. I'm going to show you what I see and what do I expect next from BTC. Now what we have here is Ethereum. I'm going to be looking at Ethereum. I'm going to be looking at the DXY, Solana, and some other alts. I'll put them in there so we can have an overview of what to expect, because the next day or two might be so volatile and may be decisive for what Bitcoin will be doing next, because we have the earnings coming up. Google's earnings, Facebook, and all the big companies are having earnings at the moment, and we're going to have the FOMC. So we're going to have, probably we might have two reactions depending on the earnings. Okay, we all know that AI is the new hype. It's really big. So I would expect this to happen. It doesn't have to happen, but that's what I see, that it could happen. Well, when we were here, I remember when we were back up here, I was talking about a possible reversal to this zone to recover this red candle. Now we're down here. You see, predictions don't always happen the way you expect them. And since we're down here, I still expect a recovery, either of these zones or even up to here, 1914, or even all the way here to 1974 region. Either recovery or blast off. Of course, the opposite can happen because we have this area of insufficiency. You need to be aware of that. We have these two big green candles over here. That Bitcoin can come halfway at least, test this value area low of this entire range, and then bounce off maybe. But if we're having Fed's rate coming up, and if we're having the FOMC, just give me a second, I want to pull up something. We have the CME Fed Watch tool, basically showing you it's going to be announced in one day, and what are market participants anticipating or expecting. We can see that at the moment the market is expecting a 98.9% chance that we're going to have a 0.25% basis rate hike for this meeting, and 1.1% think that we're not going to be having 1.1% expect at least between a 25 to 50% basis point, and 98.9% expect a 25% basis point. Either way, both in total, all in total, are expecting a rate hike. So that's what I wanted to show you. And we're going to be having the Fed funds rate being announced tomorrow. Let me just get to it. Let's go to tomorrow. Fed fund rate, projecting a 25 basis point hike. Now, 25 basis point hike, though it's bearish for the market, it may be priced in. We may have come all the way down here, already pricing in the Fed rate hike. But before we continue lower, which will be in line with Fibonacci retracements, if you look at this move down, and I was expecting this to probably be an ABC down. So we had, this is our A wave down here. All the way here was our A wave. We had our B wave, and we're coming down in our C wave. Now, how low will the C wave go? And before we go down, we had a 1 that came from down here. I believe this was our 2. This could have been our 3, 4, and 5, or it was a 1, a 2, and this is the beginning of the 3, or it's just a 3 done, and this is our 4. Our fourth wave, if we take it from the top of 3 to the bottom of 3, retraced to the 0.5% fib, you could see it's almost exact at this zone, 1867, and we might be following through to the downside. If we get above 1867 then I see there is no reason that we can't be going all the way up to 1907, 1917 zone. If we break the 1907, then it's definitely coming up for these zones or even higher. So that's your levels to watch. At the moment, the point of control here, 1866, watch it. If we break it with conviction on higher time frames and start opening and closing candles above it, then we're moving higher to 1914. If we don't, then we're coming lower. It is very possible that we come down to the value area low. You know my principle of trading volume profile. You lose the value area high or you get resistance there. As you can see over here, we did break through it. We came back tested over here, came down all the way down below the POC, deviated, came back in, and now we're below the POC, back testing it again. That means in my books that there's a high chance we're coming to the 1790, 1785 zone. Then we might find a reversal. And if we start breaking that zone, the zone that we really need to hold for Ethereum to remain in a bullish trend, is to not start opening and closing 4-hourly candles below the 1712. That's our maximum retracement we want to see. We don't want it to go any lower than that, because going lower than that will entice that we're in something else. We're no longer in a bullish move and we're coming down. That's for Ethereum. On the other hand, if you just go to volume, I'm just going to pick volume really quick. Then I'm going to jump to Bitcoin because Bitcoin is king. Volume over here for Ethereum, we've been going down. You see over here, we had the spike up, then we've been coming down. You could see on the 4-hourly, volume has somewhat been declining. It's not that bullish, bearish volume. It's declining. Though this move down had a spike in volume, but still is declining. This is a channel or wedge that has high probabilities of breaking to the upside. So if you take this channel, I'm going to give you some target to the upside, and you put that parallel line and you put this point over here and you say this is a wedge, some sort of a wedge, then your breakout point, you take it from the width of this channel. Suppose we broke out over here on this candle, you could go as high as the top of this zone, which will bring you back, recovering this insufficiency. We do have an insufficiency to the downside. We had an insufficiency to the upside. We came down, recovered it. Now we have an insufficiency over here. We need to recover it. I don't want to say we need, but most probably we can get all the way to 2003 for Ethereum within the next few days. Now, if we priced in the bearish news that we're going to get a Fed rate hike, and the dollar index is kind of rising at the moment and it's pricing in probably, tonight we might have we're having earnings announced. If earnings come out good on tech stocks, you might expect some sort of a run-up to find resistance somewhere. And then after the Fed rate hike, after we hold here a bit, we might continue lower, finish off that low. Then when we get here, we see what is it holding. Are we going to continue higher, or are we just going to stop there? When you look at patterns in the chart, you could see over here we formed similar to this pattern over here. We had this over here, we came up, broke down, as we did now, we came down. Then we have some run up over there, and you can see we came to close to, actually we tapped the 0.618. So if I assume that we might do the same thing again and tap the 0.618 from this pattern, if I just say Ethereum is being traded by, is going to behave the same, and I say this was a low and we're going to come up, then I expect Ethereum to come to 1954 and probably get rejected. It will still be in my zone and I'll be happy with it. Now let's move on to Bitcoin. Bitcoin, on the other hand, is finding resistance over here, 29,339. It's an ascending green trend line, as you can see over here. And take the VWAP off, and I'm going to try and remove, let me find the tool, the eraser. I always struggle finding the eraser. Where is eraser? Now if I take away this trend line and this trend line, just to clean up the chart a bit, reduce the line, and just leave the two volume profiles that I have. One goes back to an interesting time. It goes back to May 2022, and that's in yellow. That's your value area high of May 2022, POC, and your value area low. You see, when you lost the value area high, you came to the POC, you ranged, you came so close to the value area low of May 2022, and you got a reaction. At the moment, it's not very bullish because now you're back testing the value area high of this entire price action. Now, if I zoom up and zoom out, go to the daily, you can see this is a fixed range volume profile. That's a value area high, POC, value area low. Now, what you're doing is you're back testing it. I would have liked to see it recover this insufficiency, and you have this insufficiency. What Bitcoin could do is do something like this, come up here, up to the 0.618 retracement of this candle, and then come down, form another shoulder, and then come up. You could imagine this as a shoulder, head, and a shoulder, and come up all the way here to 30,800, 30,750, where you'll have a resistance at the value area high again, and maybe continue lower. Now, how Bitcoin would go, since you're getting a back test on the value area high, you see we're finding resistance, but we're not falling down. You're going lower, but you're not going anywhere. That means that if you can't break them down, you most probably will try to break them up. But if you cannot get up here and you're finding resistance, then you're coming to the next zone. If you break the value area low, you're coming to this range's POC at 28,023. I think 28.5 is also an important zone. It will bring you down here, somewhere around here. This wick over here would be a zone where you might find some support, but not that much of support. I would say if you break this zone at 28,789, you're coming at the POC at 28,000, almost 28,000 flat. Volume, on the other hand, if you look at it on the volume, when we're ranging, is going lower, and you're forming a rounding shape which matches with your chart. This is a small even Adam and Eve, or cup and handle, but it's very tiny. I wouldn't even consider it. And if you go on the 4 hourly, I always tell you, watch for this pattern. You come, you range, you BART out, and you go up. You do it several times. You did it here, you came, you ranged a bit, you came down, and you do it over and over. But you need to be aware you're in a bigger one. Range, spike up, range, and possible come down to the 50%. Now, if you look at the 50% for this, and you see where's the 50% of this move up, I would like to look at it this way. My 50% will bring it down to the value area low, close to where we bounced at. So we recovered half of this insufficiency. That's on the 4 hourly. And that may be enough. We recover half of it, and we continue. We go on our way up. But if I'm going to look at the wave count and say we're coming down in some sort of a 5 wave, we had an A wave down, B wave up, and we're coming down in a C. The C wave had a 1, 2, and this is a 3. I would expect a 4 to bring us up all the way to 28,000, 29.6. 29.6 would be a zone of resistance, then followed by the POC, which would be the golden pocket of this move down. So if you see a move up today, just watch. Don't be too bullish. If you're not buying at the lows, don't buy at the highs. You might be at resistance. Be aware of these levels. $30,656, $29,788, $29,219 is your current resistance. So just watch out. Looking at the EMAs, at the moment you're below the 50 EMA. So your 50 EMA value area high are resistance, but you fail to break down. Like from the 24th of July, you fail to break down. You're just spiking down. You're not going anywhere. I don't like that we have this wick, but it could be done with this range. 15 minute. We had a small spike in volume here, nothing big, 16,000. Fibonacci channels in my book, my Fibonacci channels play a role, and on the daily, we are below the 50, but we're failing to break through. So don't get fooled by it. You might have a reversal. It happens sometimes. You come to the 50, you fail to break, you continue spiking down, then you go up. Then maybe you come down. But yeah, just be aware of where you are in the chart. We still could come all the way down to 28,300. Now looking at DXY. DXY had a nice move up, and now it's fizzling out. Let's look at the 15-minute time frame. Are we losing our 50 EMA? We're just there. We're about to lose it. If we can't hold it and start breaking down, then that will give room for Bitcoin to move up. And the excuse will be the stocks announcement. Google and the rest announcing their earnings. Sorry. But it looks like we're going to lose the 50 EMA over here. That's for the DXY. My targets for DXY to the upside. To the downside, they've been hit. I mentioned them, or I gave you them ahead of time. It was around $99 or $98. And targets to the upside, they go all the way up to 114. But we haven't got there yet. But I'm not going to doubt it. I removed it from the chart. 114 is probable, but I'm not liking the fashion in the way it's moving, because this movement doesn't look that good, but we're kind of holding this. It might give a reversal sooner or later, but we have this small insufficiency sort of recovered. We had some few bullish days, but look at that. That's not a bullish candle. Nasdaq is attempting to make new highs for the year. If it can get above 15,942, 16K, then it will be making new highs. Dow Jones, I'll just go quickly on the Dow Jones. Dow Jones is leading. I believe S&P is even leading further. S&P has taken out its October 2022 highs, which were somewhere here. This was April 22. March 22, that's what we're going for in the S&P. So yeah, things are looking a bit more bullish for the markets. Bitcoin, crypto may be lagging, and we might have a reaction after that. But as you can see over here, volume spike, then volume is declining, but that doesn't mean you're going to go down. It could mean you're holding the range. You see this move up? It was on volume declination. We had a move up, volume decline, and once we got here, we had a drop. And then we had a spike. Again, volume decline, spike, drop probably. Solana, respecting the levels, I like Solana. Solana is in a tradable range, 22.8 to 23.6. That is your range for Solana. You trade the range until it breaks. Now you're in the middle of the range, you don't trade it. You wait for the top of the range, 23.6, you take your chance, because trading is taking chances. Then you wait for it to come down and you take some profit in anticipation that it might break lower, and you open a long in anticipation if it goes up, you take some profit. If it continues higher, you'll get stopped out of your short trade, that's fine, and you continue higher. If it goes lower, you're happy. Same thing. In terms of EMAs, we didn't get any sign yet. No buy signal even on the 15-minute. We have this insufficiency that could take us all the way up to $24 or even $24 is in the cards if we can go up. We had this insufficiency, we recovered. We have this that is still waiting for us. We haven't recovered much. That could take you all the way to 26.1. Solana, if you look, it's just in a huge range. If you zoom out and turn your indicators off and look at that, we are in some sort of a range. We have some deviations. This is on the daily, so the deviations last days, but we broke out of the range over here. We're just back testing previous resistance here. This is previous daily resistance turned into support. If we hold it, we have a chance of launching, but in my opinion, we have a bit more down to go, though this is a bullish pattern for Solana, because this is a falling wedge or a declining channel, a falling channel, and that usually breaks to the upside, and it could give you a nice move to the upside. Let's see how far could it go. So we go that way and bring it down, and you measure the width, and you take it in a presumed breakout point. You say this is where it might break out. If it breaks out today, it could take you all the way to $29. Tomorrow it might be at 28.8, and so on as a start. So it doesn't mean it can't go higher. It could go higher. But look at this. This is what we did in Solana previously. Let me just get rid of the volume profile for a second. Came up, came down, and we formed this pattern similar to this over here. Came up, and we broke all the way down, only to hold the 0.618, I believe. So what you don't want to see from Solana, we came below the 0.5 slightly. What you don't want to see from Solana is Solana losing. To remain bullish, Solana needs to hold the lowest level. It shouldn't go below 17.116. That's your threshold. If it comes to $20 and bounces, that would be perfect, because that will be in line with the value area low and the 0.618 Fibonacci, aligned perfectly for Solana over here. You might have the 50 EMA coming in before that. On the daily, your 50 EMA is right over here, 21.686 ticks. About to have a bullish cross, but we're curving to the downside, but we are in the range. We recovered this green insufficiency, so I like it. This is not bearish. It could break down, don't get me wrong, but a recovery of a vector holding previous resistance, turn support, it could be a launch pad for it. It could be, but I don't like the volume. I don't like the price action. To me, it looks like it has more downside to go. You can see as we were moving here, volume declined, 2 candles, then not much of an increase of a volume on the way down. Let's look at the 4 hourly and see how volume was behaving as we move down. Our volume was declining. I won't say it's a triangle. It wouldn't be perfect, so yeah. I'm going to look at Litecoin, then I'm going to wrap it up. Litecoin. Litecoin, on the other hand, is has broken. We came to 95. You lose 95, you go to 85. You lose 85, you come to 73. And in between, you could have another range marked out. You don't have to stick to my range. This is another range. This is how you mark it out. Look at areas of demand and supply. Over here, you can see this was a demand area. You had a wick, and you pumped from it, went to 95. Now over here, this point now is your new area of resistance. If you can turn this level of 89 to support, then you have chance to recover this candle, possibly this candle, and that might bring something for you. Let's look at Fibonacci extensions. If we say this was a correction moving down, you had an A down, a B that came all the way here, and you're expecting a C wave that could come. You came to the 0.618, that's all right. You could come to $80 at the 1-to-1 or 1.618 at $65. But if you can hold this, if you can hold it, let me put a fib retracement from this one, from the low over here, assuming this is a first wave up, a big first wave. Then your 0.618 is very close to the other 0.618 at 87. You see this is at 89 and this is 87. So there is some alignment in fib retracement and fib extension levels that may hold. You recovered these vectors, so that's good. EMA wise, what are your EMAs pointing? They're pointing down on your daily time frame, but you're holding the 200. You're sort of there. I mean the 800, you're struggling at it. 1 hour, you'll be struggling at the 200 EMA. Let's see. You're below the 50, sorry. Your 200 is up here at $92. So if you can get above the 50 EMA, $90, you could come to 92. That's your next zone of resistance. You're below the psychological low of the week. You could come all the way down. If you lose this level of 18.8, your next zone to be support will be 81. All right, that's all I had for the crypto market. I just wanted to warn you of what's coming up. Earnings, Fed rate. It depends how they sound after the Fed rate in the press conference. So it's Fed rate and the press conference that happens after it. Fed press conference, FOMC statement, then the rate. So tomorrow at around 9 p.m., that will be UTC plus 3. 9 p.m. is at UTC per 3, so it'll be 6 p.m. UTC. You'll be having some volatility, and that will coincide with just after the London market closes. New York will be alone to do as it wishes, and Jerome Powell will be speaking. Okay, that's all I have for the markets. Hope you liked it. If you did, smash the like, subscribe to the channel, join the free Discord, share the videos, and I'll see you